Awesome. My name is Dave Auerbach. I'm the Chief Investment Officer of Hoya Capital. I'm excited to be joined by uh, two very good friends, actually, one more than the other. I've known Jared for so many years, but the CEO of NewLake Capital Partners, Anthony Coniglio, and CFO Jared Annenberg joining us today for an exciting hour-long webinar to learn all things cannabis REITs, and the outlook under a new administration. So Jared, Anthony, I've got like 15, 20 questions teed up. Remember, we're going to be breaking this out. We're going to be sharing this content over the course of the next several weeks. And so, obviously, for those that are tuning in, if you have questions, feel free to put them in the chat. We'll try to address them. But I think we did a pretty good job here of putting together the questions that a typical investor might ask. So, why don't you say we just jump into it? How's that sound?
Yeah, that sounds great. David, thank you so much for giving us the opportunity to chat here about NewLake today.
Thank you. All right. Question one. What do you do and why should an investor care about NewLake? Who wants to
Yeah.
tackle that?
Yeah, I'll tackle this first one. Once again, thanks. We really appreciate the opportunity to chat. So what is the original thesis of NewLake? It was to acquire real estate assets that were valued differently than the rest of the commercial real estate market and look for the value of those assets to appreciate over time and really use our first mover advantage to secure a quality portfolio of these assets. And these are indeed assets focused on the cannabis sector. And so think cultivation facilities and think dispensaries. We own 32 properties across 12 states with 13 tenants, and we have some of the leading operators in the industry. And in fact, when you look at that thesis today, it is still very much intact. These are underappreciated assets in terms of the broader real estate market appreciating the value of these. These have a long duration on them with a weighted average remaining lease term of approximately 14 years. And so we think over time in securing these above market lease rates, obviously recognizing for the risk, but securing these above market lease rates over time, the value of our portfolio will appreciate much the way you would have seen, say, with data centers in the late 1990s, early 2000s, or even other lab space that occurred over the most recent decades.
All right. Well, one thing that makes you guys unique is your listing status. We know that one of your peers is New York Stock Exchange listed. So why are you guys not listed on the New York Stock Exchange when they are? And what kind of limitations should an investor be concerned about when it comes to NewLake?
Right. So now you're poking us in the eye a little bit. It's a sore point, but thanks for giving us the opportunity to talk about it. The first thing I'd say is we run our business to qualify in all respects of listing on the New York Stock Exchange or the NASDAQ markets. The reason we're not listed is because of the industry that we focus on, the cannabis industry. They won't list us without legalization or without a clear line of safe harbor, excuse me. And so why is one of our competitors listed? Well, they listed back in a period of time where there was something, they're in essence grandfathered. They were listed when the Cole memo was active. This was a Department of Justice memo was issued to all the Department of Justice offices. And so the New York Stock Exchange accepted that at the time of their listing. When the Cole memo was rescinded in 2018, that's when the New York Stock Exchange and other major exchanges in the US said, we need legal change for the status of cannabis in the US or an explicit safe harbor. And so we sit here trading on the OTC and waiting for that regulatory change.
Okay, so maybe what kind of issues and limitations should an average investor think about because you guys are OTC listed?
Yes, and this is a critically important part of the story for NewLake. Again, we qualify in all aspects from a governance perspective and the way we run the company to list. But because we're on the OTC and we focus on cannabis, most prime brokers, institutional prime brokers, won't custody our stock. They would require, because we focus on cannabis, to be on a New York or NASDAQ exchange, a little bit of a chicken and an egg there. And so from an investor perspective, making sure that your broker dealer or your prime broker, if you utilize a prime broker, will custody the stock. while that's the issue, therein lies the opportunity. Often we hear about retail investors looking for the opportunity to step in front of institutional investors. And people often lament about how they can't get into these good stores or these good stocks before the institutions grab the value. Well, here, because of this structural limitation on institutions, a significant amount of our trading is happening in retail. And so we think that over time, as we get listed on a New York or NASDAQ, as we see increased demand from the institutional investor that really wants to play cannabis real estate but can't right now with us, we think that'll drive demand and drive value for our shareholders.
Let's shift gears a little bit. What about potential credit quality concerns? You guys have a high dividend. Would that potentially mean that your portfolio might be a little bit lower quality than some of your peers?
Yeah, no, another good question, David. Usually when people see a high dividend yield on a stock, they think of one of two things. They think either you have a leverage problem or you have a portfolio issue, a massive portfolio issue. So let's tackle those. From a leverage perspective, we have only $7.5 million of debt on a $435 million balance sheet. If you look at it on a debt to EBITDA basis, it's 0.2 times, 0.2 times debt to EBITDA. We have $83 million of available capacity under our credit line for future growth. But as you can see, it's certainly not a debt issue since we're almost unlevered, which is unusual for REIT. So the type of return we're driving is yet without leverage. So the other issue is, well, your portfolio is at risk and therefore your dividend is at risk. Well, we recently announced our third quarter earnings and we announced that we had an 84% payout ratio. Our target payout ratio, our AFFO payout ratio target is between 80 and 90%. So 84% payout ratio. We can have 16% of our revenue disappear and we continue to be able to cover the dividend. And so what you typically see with these higher yields is you'll see that leverage problem or you'll see a 98, 96% payout ratio. And as you can tell, we are under-levered and we don't have an issue with the dividend.
Well, you must have a great CFO who's looking out for your balance sheet there, managing your liquidity and your leverage situation. So kudos to your CFO.
We do.
Who is that? Oh, yeah, there he is.
Lisa Meyer. Jarrett runs acquisitions. Jarrett is our senior vice president in charge of investments and acquisitions.
Here I am talking Jarrett up for not. I apologize.
Yeah. Not quite CFO.
Let's fast forward. I mean, obviously, cannabis has taken over the country. We know it's legalized in a bunch of states and continues to evolve. What do you think the market looks like for the sector in 2025? And potentially, how's the financing side of the market look for you guys?
Jarrett, why don't you take that one?
Sure. So as we head into 2025, we expect, especially in the first half of the year, a little bit more of the same, if you will, right? The industry's kind of in a place. There was a static place today as we wait for some federal legalization, as more states start to turn from nothing to medical and medical to adult use. Even today, there was the first hearing federally for Schedule 3, but the DEA, which is a great step in the right direction. But operators will continue to look at operational efficiencies across the country as they maintain balance sheet and push towards profitability. And on the financing side, again, a little bit more of the same. We have capital to deploy. We have a few competitors that have capital to deploy, but there really is a select few of us, and all of us are, we will be focused on high quality opportunities, and we'll be able to get those above market returns given the lack of competition that we have in the space.
Jared, I want to expand on that a little bit. You're talking about some of your partners that have, or some of your competitors that have, let's say, deeper pockets, more flexibility. What about like institutional players? Is there an opportunity for a lot of these guys to JV up with guys like, let's say, Nuveen or a KKR to expand portfolios in that capacity as well?
Not today. So given the federal illegality today, those larger institutions have really stayed out of investing in the space, which for us is the opportunity and has been the opportunity that once those institutional players come in, we're going to see cap rate compression. The value of our portfolio is going to go up. Our cost of capital is going to go down. And because of our relationships with these operators across the country, we'll be able to capitalize on that lower cost of capital to continue our growth pattern.
So meaning like you guys could take potentially a Cresco national as expands more nationally as well. Is that what you're implying?
Yes, on a company like Cresco, we will continue. We can continue to do deals with Cresco as we have them in our portfolio today. We think when institutions come into the space, I think they'll both look at operators, but I think that they'll look at NewLake as a smart way to play the space because it gives them exposure to multiple operators across the country, gives them a dividend yield, and allows them to play in the space.
It's good
Right.
stuff.
And David, if I could expand, if you think about those large organizations that are very real estate centric, you just mentioned, I would say that a number of them are watching the sector but can't get involved because of the illegality. So it's just a matter of time. And we think that they'll be looking to enter the sector, some as a competitor, but typically the larger the organization, they're going to look for a platform to enter into the sector. And so that could be an attractive opportunity for NewLake and our investors as well.
So you would assume that those guys are having conversations. They're getting their feet wet. They're sharpening their pencils for when that time comes so that they basically can dive right in.
Yeah, I mean, cannabis real estate, because of the state approach and the need to replicate your infrastructure on a state-by-state basis, generates significant need for real estate capital for both cultivation and dispensing. And we think that structure will persist for years to come. And so that requires billions and billions and billions of dollars of real estate capital that's needed. And many of these organizations, the large ones that you've mentioned, they're very well situated to serve the industry, but for the illegality. But because of the specialized nature of this industry and the need to understand it, not just its credit, but to understand the regulatory issues around this industry, the 6 years or so that we've been at this has created what I would call somewhat of a moat around the business in terms of understanding where and how you want to put capital out. It's not just the tenant, but it's also about the property and the jurisdiction it resides in.
And just thinking about the institutional landscape, forget the Nuveen's and Krebs, start thinking about like the sovereign wealth funds, government of Singapore's, Abu Dhabi, Canada Pension, where those guys are coming in $500 million, $1 billion type deals. I mean, again, the legality side of things, especially on a country to country basis, will really determine what that investor pool looks like 5 years from now type of thing. It'll be really fascinating to watch.
Yeah, we agree.
All right. So is there an opportunity once this becomes legalized? I mean, do you guys opportunities, does the opportunity set change once safe banking legislation is potentially passed?
Sure. And I think that it depends on exactly what legalized means, right? Because today it's obviously legal at different states, but not at the federal level. Speaking specifically on safe banking, as the last draft was written, it allows cannabis companies and operators to bank with normal federal banking institutions. Most operators can do that today. Every single one of our, people think our rent is paid in cash. It's not paid in cash. It's always paid via wire through normalized banks. If you can't find a bank, you're probably not one of our tenants. So what we think happens if safe banking happens, the business itself stays the same, right? The state structure stays the same. Wholesale prices in Massachusetts or Pennsylvania don't change. What hopefully does change is it brings more institutions into the business, able to invest, which would hopefully bring down our cost of capital. So that's really the opportunity for us if safe banking happens. Put some of those players that are currently on the sidelines, hopefully brings them into the space.
So
Not
does that
to
mean
mention,
it's not?
I'm sorry, I just want to say, not to mention the growth opportunity. Today, currently, the legal cannabis market is about $30 billion. And most estimates put the total cannabis market, both the legal channel as well as the illicit channel, at over $100 billion. And so this story in cannabis is about converting those illicit sales into the legal channel. So by legalizing, we could move regulated, tested product into the legal channel, and we could see that $30 billion slice of the pie grow and grow and grow, and over time become the dominant source of cannabis sales in the US.
I mean, there's no story like watching what happens in New York City. All the private clubs that got closed, just seeing it sold on the, basically on the streets at every corner versus the handful of, officially legalized dispensaries that are, approved by law and stuff. So,
right.
again, I'm in Texas, so we don't know what that means at all. We'll be state number
Not yet.
49 or 50, in my opinion. By the way, for those that are listening, if you have questions, put them in the chat. We will definitely try to address them. But trust me that I think we're going to be able to answer all your questions in due time here. So you mentioned, Jared briefly mentioned about today's hearing in DC and the potential rescheduling. What does this mean? What's the potential impact to you guys?
Yeah, and so today what was happening, really quite historic. Historic from the perspective that the DEA has proposed to reschedule cannabis from Schedule 1 to Schedule 3. So most people aren't probably familiar with what's on these schedules. Think Schedule 1, think fentanyl. And this is a highly addictive, Schedule 1 is reserved for highly addictive products with no medical use. And what the DEA has recommended at the urging and the recommendation of the Department of Health and Human Services, 252-page report that was submitted last year, they recommended to move it to Schedule 3. So it does have some, what Schedule 3 means is it does have some medical use, could be addictive, but it opens the door for some additional research. So it's really monumental for the industry. What it doesn't do, it doesn't legalize it. So a lot of people think, oh, now we'll have, doesn't actually legalize it. It's just on a lower schedule within the Controlled Substances Act. What it also does specifically for NewLake is it eliminates something for all of our tenants called 280E. This is a code within the Internal Revenue Code, section within the Internal Revenue Code that eliminates certain standard deductions for companies that traffic in a Schedule 1 and Schedule 2 substance. So if you were to look at the effective tax rate of most of our tenants, you'd see they're paying anywhere from a 45 to a 60% effective tax rate. It's very, very, very punitive. And we estimate by being able to take standard deductions and the elimination of 280E that our tenant base in aggregate could save approximately $500 million in taxes. And we've yet to identify any other REITs out there that have had such a significant improvement across its entire tenant base with one regulatory action, such as the removal of 280E. So it's an absolute positive for the industry and moving it forward, getting more research, eliminating 280E, and it's an absolute positive to our credit quality.
So for a dummy like me, is Schedule 3 the bottom, like the lowest level? Does it go further?
No, it's a good question. Schedule 5 is the lowest, and of the 43,000 comments that the DEA received, and never received anything close to that level of comments when they proposed the rule, never received anything close to that in other rescheduling procedures, but you had well over 50%. You probably had 2/3 supporting not just rescheduling, but actually descheduling, and that would mean to take it off the controlled substances list entirely, and that would be really a decriminalization of cannabis. But right now, the proposal is to move it to 3 of 5.
And then real quick, what other drugs would be similar on level 3? Is that
Think of a Tylenol with codeine or ketamine. Those are two that come to mind.
Ketamine, okay. So we briefly talked about Texas. If federal legalization happens, how do you guys benefit from a state like Texas?
Yes, and so think about growth. Right now, Texas actually does have a medical program, but it is very, very restrictive, and there's only under 20,000 patients. We think it's how many patients, Jarrett?
Latest count, there's about 70,000 patients in Texas, but there's only three, but there's 3 licenses, and they're very limited as it relates to form factor. I'll take this when I say form factor and THC levels. So most people don't even know that there is a program. Folks aren't, it's just extremely limiting. So let's say today there's 70,000 patients. Even if Texas goes forward with medical use, which generally the country is overwhelmingly for cannabis from a medical perspective, ignore even getting to full adult use legalization. A normal state does about 2 to 3% of its population enters into that medical program, which in Texas would mean 10 times the current number of patients. So if you think about the infrastructure that needs to be built to serve that population, you're talking couple million square feet of real estate on the industrial side to produce products. And if you look at Florida, that has about 600 retail stores today, you could be looking at upwards of 600, 700, 800 stores. So from a growth perspective, that's just on a medical basis. If a state that goes from nothing, fake medical, I shouldn't say fake medical, limited medical program to a true medical program,
Wow.
significant opportunities for growth.
I think about the revenue side of the equation. We've seen the success in California, Colorado, the rebate that Colorado residents got in year one, et cetera. I'm not getting on my political soapbox here, but I think about when we lost Anthony.
My instinct is he knows that. Yeah, he's had some technical difficulties today, but that's okay. You can keep going.
I was just going to say, when you think about like some of the stuff here, like gambling in Texas, there's no casinos in Texas, but if you drive to exit 1 on any of our freeways to the next state, 99.99% of the cars in the parking lot are Texas license plates. So all of this money that's leaving the state to go out to other states and get it, I think about from the tax and revenue side of things, and it's, the opportunity.
It's massive. And it's what Anthony said earlier, right? The cannabis market people think is $100 billion market. It's not that folks in Texas aren't getting high and they're not using cannabis. They're just getting it from illegal channels, which, you're looking at the revenue side. You can also look at it from a crime perspective, right? The more legal channels you have, the less illegal channels that you have.
Well, as we wait for Anthony, I'll tee you up with the next question. And if we have to punt till he gets back, we could do that as well. Oh, here you go. Maybe you could talk about your balance sheet, your leverage status. We briefly touched upon it. What should the average investor understand about your cap stack?
Yeah, again, Anthony mentioned it, right? We have a very limited debt today. We have a $90 million credit line, of which we've only drawn $7 million of. From the start of the company, the concept was to use debt where appropriate. We only raised equity from the get-go, but we have significant debt capacity in front of us that we'll use moving forward, which really will drive growth.
Anthony, I know you dropped off for a second. We were briefly talking about, legalization and potential impact of Texas. I mentioned drive to exit 1 on any freeway out of the state, and you'll hit the casino and you'll see 99.99% of the cars in the parking lot with Texas license plates. So all the revenue leaving Texas going out of state. And then I teed up Jarrett asking about the balance sheet. We talked briefly about your leverage status. What should the average investor understand about your cap stack? Do you have anything that you want to point out there?
Yeah, I came in at the end, and I apologize for the technical issues. I think Jared covered that all. One thing I would add to the Texas, though, thinking about it, is it's not just Texas. There are other states that remain to be large growth opportunities. North Carolina, you have a very good medical program in Florida, but that state still can go to an adult use market. Same thing for Pennsylvania. And so we have significant population centers in this country that still either have a very nascent or tiny program like Texas or Georgia, or their medical only program like a Florida or a Pennsylvania that drive future growth.
Remind me, Florida, they just in the recent election, the full legalization measure failed? Was that what happened?
Yes, it was a ballot initiative and required 60% to amend the state constitution. It did get bipartisan support with the president-elect Donald Trump supporting Amendment 3, as it was known, but it failed to garner the 60% support at the ballot box, with Governor DeSantis running pretty hard against it in the state. It did gather 56% support. But there was some other noteworthy, and maybe we can get into it now or later, there were some other noteworthy takeaways from Election Day as it pertains to cannabis.
Well, before I go to the next question, let's briefly touch upon, the Red administration. Does that bode well for cannabis in general, do you think? Like, is Trump pro-cannabis across the board? Like, where do we stand there?
Yeah, well, again, another monumental year for the cannabis industry. Both presidential candidates embraced cannabis reform as part of their election campaign. And so the thought, if we were here back in June, we probably would have been debating if a Republican sweep would have been good for the cannabis industry. But as we sit here today with indeed that occurring, I can say, I think it is going to be good for the industry. And so why is that? Number one, President-elect Trump came out in early September and announced his support for not only Schedule 3, but also that Amendment 3 in Florida. So we talked about rescheduling earlier. He said that he supports the conclusion of the rescheduling process. And in fact, his nomination recently for the head of the DEA was in favor with some local activities. In the past was in favor of decriminalization, a decriminalization bill that was passed. So we expect that DEA administrator, if confirmed, to be supportive. You can then look at a number of the other appointments within the administration and see similar levels of support, whether it be head of the DOJ and Attorney General. So I think significant support within the Republican conference is potentially there as we move to more of a deregulatory regime. So the table is certainly set. Now we do need to see some follow through, though.
Okay, good stuff. So part of the reason why we're sitting here today is that, as you know, we run an income platform. We've got a couple of funds. We got the high dividend yield ETF, et cetera, but our clients are on the hunt for dividends and income. So can you briefly touch upon your dividend, your AFFO payout schedule briefly, but maybe talk about your current dividend strategy and keys to growth?
Yes, and so our payout approach, our AFFO payout, our target AFFO payout ratio is between 80 and 90%. And as of the third quarter, we were at 84%. We expect to continue to stay within the 89 to 90% threshold. Where do we get growth from? We get growth from three sectors. Number one is our built-in escalators. Every year, 2.6% across the portfolio. Again, we have approximately a 14-year remaining weighted average lease term on the portfolio with an average 2.6% escalator. So collect rent, and every year our revenue is going up by 2.6%. Since this is all triple net leases, we don't have any increased expenses on a year-to-year basis, say, driven by inflation. And so our costs are primarily our people and our team, which we manage to be pretty small. We have 8 people in total. And so we can very much control our costs. The second area of revenue growth is from our existing commitments. And as we sit here today, we have over $10 million of existing commitments that as we put that capital out over time, we'll be charging rent. And then the third component is from growth. I mentioned that we have about $87 million of available credit capacity. And so as we identify new transactions to execute, we can add additional revenue by executing those new transactions on our credit line.
No company jet?
No company jet, nor never say never, but I don't think we'll ever have a company jet, not in our DNA.
All right, so where do you guys fit in the cannabis chain life cycle? And as cannabis becomes more mainstream, how does your position inside the industry change?
Sure. So for us, we look at, our deal flow comes from really the start of a cycle through a balance sheet, an M&A transaction for operators. I think the first place when you look at some of our acquisitions, it comes from states turning from nothing to medical or medical to adult use, and each individual state needs to build up its program, partnering with operators, buying de novo sites on behalf of operators in some instances or from operators, and funding construction through completion on a cultivation facility or retail. But we're also looking at deals and have done deals where we're buying properties from an operator. It sits on the balance sheet. It's not the best use of their capital. They're looking to free that capital up to go invest in the business for growth. And we're also looking at opportunities from an M&A perspective where an operator might be buying another operator or a license in a new market. And we can come in as part of that capital stack for the operator buying that asset. So we can come in on their behalf. So I think as cannabis becomes more mainstream, we're still going to be seeing all three of those opportunities. In a place like Texas, it's going to most likely be de novo sites because the program needs to be built up. But I also think as cost of capital comes down, we'll be buying more assets directly from operators that are already operational as they look to free up cash to invest in growth. Some of them have been waiting for cost of capital to come down. We think there's over $2 billion of real estate sitting on some of the top MSO balance sheets right now. It's not the best use of their capital.
I think Willie was showing off some of the candy or edibles there briefly for a second.
Hydration.
Advanced hydration.
Yep.
Is there an international opportunity eventually, do you think, for you guys there, or is that way down the road?
Yes, I do believe that there's an international opportunity. In fact, we spent some time in Europe earlier this year, looking at that market. What you had happen back in April was Germany, in essence, with the legislation change, legalized cannabis in Germany. And so about a month ago, you had most doctors, a new rule went into effect where most doctors in the country can prescribe. And so you're watching that German market grow significantly quarter over quarter, month over month. There's movement in other jurisdictions, whether it be in the Netherlands or in France. And so over time, we think that Europe becomes another one of those markets. And what's nice about Europe is you don't have the difference between state and federal law. Once Germany legalizes, Germany legalizes.
Okay, interesting. We talked about the Red administration, so I guess we've already hit that. But I guess over the overall political climate, let's fast forward maybe a couple of years. What does that political climate maybe look like down the road, even though we've already briefly talked about how it could be a pro with the Red administration?
Right. And so before I get my crystal ball out, let me first give you some additional outcomes from Election Day. And so you had on the ballot a number of initiatives around medical and a number of initiatives around adult use. And what I read coming out of Election Day is for medical across this country, this issue is settled. People in America want medical, full stop. Gallup and Pew have consistently done polls looking at the populace's view on medical cannabis and adult use. And you continually get above 85% support in this country for medical cannabis. In fact, we saw it at the ballot box. You had Nebraska, which went to Donald Trump by over 60% in this last election. Nebraska voted in November to approve a medical use program, 71% in support, significant support for medical use. In Kentucky, which approved legislatively a medical use program last year and started handing out licenses, there were over 100 jurisdictions, both cities and counties, that could have opted out. And across those, some of them very conservative jurisdictions, every single one of those jurisdictions approved to have medical cannabis businesses located in their jurisdiction, and in some cases by in excess of 75% of the vote. So again, in these conservative states, historically conservative states, significant support for medical use cannabis. On the adult use side, I think there was more work to be done in the red states for freedom of choice. And so you had initiatives fail in North Dakota and South Dakota. And as we said, it failed in Florida, but it was 56% in Florida. So it had a majority of the state's residents supporting it. So what does that mean for the future? I think we're going to continue to see states legalize on the medical side, either expanding their programs like your home state of Texas. I think over time it'll expand its program, or get a new state such as North Carolina that will approve medical use. And then we'll see some of these medical states like a Florida and a Virginia and a Pennsylvania actually get adult use programs launched.
I want to touch on Florida real quick again. You talked about 60% was needed. It was at 56%. So because it was so close, and I know we can't use the word guarantee in our business, does that mean it's guaranteed to be on the ballot again next year because it was so close?
It could be again in 2 years, and it's possible. Really, what that's going to come down to is the industry's desire to put the cash forward necessary to get it back on the ballot. 60% is a pretty high threshold, and in order to change the state constitution, it's going to continue to be 60%. So I think the industry is going to try to get something done legislatively, and we'll see what happens. And we also haven't talked about the Farm Bill. The Farm Bill is another vehicle to the U.S. Farm Bill to potentially see reform change.
How many votes is really that incremental 4%, though? Like, how many thousands of people is that incremental 4%? I wouldn't think it's that many.
I don't have that statistic, David.
Right.
I've got to think that it's probably well over 100,000 votes, though.
Oh, so it is a lot. Okay.
I think there were a lot of people that voted in Florida this election cycle.
Pardon my ignorance. All right. I know I've asked you this before, and I'll ask again. What keeps you up at night? What lingering concerns do you have that, kind of concern you?
Jarrett, why don't you take?
I mean, we always say it, but we mean it. I mean, we worry about everything all the time, and we worry about all of our tenants all the time. Nothing that part doesn't change. When it comes, specifically to the company growth, I think that we have over the past 6 years been conservative. I think we've always said that that quality is more important than quantity, and as we move forward, we'll continue with that lens. So it's really a function, keep us up at night is making sure we find the right opportunities that are quality opportunities with good operators within state licensed regulations that we like.
Anthony, anything you want to add there?
Custody is the other one that keeps us up at night away from the portfolio. We understand that custody is critically important for our shareholder base and can unlock some additional value by bringing in the institutional bid that can't execute on its desire today. And so we constantly focus on different ways to get on an exchange that could open up more custody.
Okay. So what inning are we in right now when it comes to cannabis? How much growth opportunity really is there on the scientific front? Because it's really just about going to Phish and Grateful Dead concerts, right? I'm a biased Phish fan, as everybody knows who knows me, but it's not just about Phish and Grateful Dead concerts, right?
No, I as it relates, using the baseball analogy, I think we're probably in the third or fourth inning. I think it's still very early goings. It's still illegal recreationally in a lot of states, medical and only some. Anthony said, the $100 billion total market, only $30 billion is legal today. So we have significant room. And how much room for growth is there on the scientific front? And it's only for Phish shows. I always tell people what has been the most interesting thing for me in the industry is going to a store or dispensary at 11 o'clock in the morning on a Tuesday in rural Illinois. And there's a line, there's 10, 15 people in line. There's a line out the door. And it doesn't look like me in college in a hoodie. The people that are in line are, 60 to 85 years old. And they look, mothers and grandmothers that are really using the product to solve something for them that they couldn't get elsewhere, whether that's helping with sleep, whether that's helping with pain or arthritis. I think that there is a large medical use for the drug. And over time, as it becomes more mainstream, more dollars will be allocated towards research, which will allow additional uses and form factors to be released for the scientific front, for the medical front.
I mean, I think about CBD, and it seems like 5 years ago, nobody was talking about CBD, and now it's everywhere, right? So and that was through scientific exploration. That's why I'm just curious, is there another
limited scientific exploration? I mean, let's remember this plant has been around for, I was going to say centuries, right? Centuries and centuries. It has been rooted in Eastern medicine and has had uses through the centuries. And it wasn't really until our federal governments, I'm not a conspiracy theorist at heart, but if you go and you do the research, you learn that our federal government actually has had this war on drugs rooted in the wrong place. It wasn't, we don't have to get into it, but it wasn't founded on science, this war on cannabis. And so by unlocking the opportunity to do some research, we can validate what we've all heard from friends and family members that have utilized cannabis to treat pain as an alternative for opiates, to help stimulate appetite for cancer patients. I could go on and on. We all have those stories of somebody we know that's utilized cannabis as medicine, and we could finally get the research that could substantiate that and put this issue to rest and get this plant kind of out of prison, if you will.
I like that. All right, so we've talked about the opportunity. Again, I keep on hammering this point because it's, if this happens, then this could happen. So as we've talked about, more states potentially approving adult use and all this other stuff, really to the bottom line, what is the potential impact? I mean, could a dividend more than double or triple? Earnings double or triple? I mean, again, I know it's hard to pull out that crystal ball, but really thinking about your end investor, as more states approve, here's what this could mean for this company at the end of the day.
Right. And we certainly won't be able to provide any forward-looking statements, particularly around our dividend, but the growth opportunity is there for the taking. And the competitive landscape today, quite frankly, there are less competitors today than when we started the business nearly 6 years ago. There are very few businesses that can actually say that. Well, why is that? It's because we think we've got one of the best portfolios in the industry, and we think that with our portfolio, we've been able to withstand a difficult period in the cannabis market. And so that first mover advantage, that limited competitive landscape, will position us well to provide the real estate capital necessary as these states that we've been talking about ultimately either expand or approve a medical program, or as a medical program transitions to adult use. Each one of those actions generates a larger and larger tangible market opportunity for the customer base. And given the state structures that exist, you have to have the cultivation and the dispensing activities occur within those state lines. And we think those will be the rules for the foreseeable future.
Without talking about your competition too much, at least when it comes to the world of publicly traded REITs, can you maybe address what differentiates you from those 3 or 4, is it 4 other REITs that are involved in the space, really? Like, really kind of what differentiates NewLake from the other cannabis REITs that are out there?
Yes, there are 4 publicly traded REITs that focus on the sector. There are 2 mortgage REITs and 2 equity REITs. The mortgage REIT, we're an equity REIT. And so again, triple net leases, second largest owner of cannabis real estate in the country is NewLake. The mortgage REITs are separate. They focus more on, even though they take real estate as collateral, it's a much shorter duration, higher yield, in many cases, just a different risk profile that they're looking at. They'll take licenses, or they will take other cash flow as collateral in addition to the real estate.
Is this AFC Gamma and Sons? Is that who we're talking about here?
Well, Sons would be focused, I believe, that when they spun out Sons, I believe that was on resi, or it was non-cannabis. It would be AFC and Chicago Atlantic. Those are the real estate. Those are the REITs that focus on mortgages. So I view them, even though our tenants and their borrowers sometimes overlap, they're providing a different product and service, shorter duration, typically higher yield, and different risk profile analysis.
And then on the equity side, it's you, IIPR, and Power REIT. Is that correct?
Power REIT, I'm not aware, has done anything in the cannabis sector for 4 years. They were very, very active back in the 2019 range, did a lot of Colorado outdoor grows. But if you look at their disclosures, you'll see a significant unwinding of that portfolio. So I don't view them as in the sector anymore.
Okay.
So us and the other name that you mentioned, yes.
Okay.
And so what differentiates the two of us? We're both equity REITs. And I'd say, and we have a lot of overlap in terms of the tenant base. And so we have just a different underwriting approach. We focus, and have since the very beginning, more on limited license jurisdictions. And so you won't see many assets in our portfolio that are in jurisdictions, say, as Los Angeles, where you unlimited licenses in Los Angeles, or in Oregon, or in Colorado. These are states that, because of the unlimited license nature of them, created more and more difficulty and resulted in more and more issues over the past 18 to 24 months.
Okay. Just a couple more questions teed up for you guys. And then if the audience has questions, put them in the chat, and we'll let you guys go on your way. But what do you think the market has wrong when it comes to your company? If you were going to try to convey a message to an analyst about what they're wrong, what would you say?
Yeah, we've touched on it here already. Quite simply, it's the assumption that the high dividend yield portends problems. It's different why we have a high dividend yield relative to why you see it in other businesses, in other REITs. Again, typically there's a leverage problem or there's a big portfolio problem. As we've covered here today, with only 0.2 times debt to EBITDA, we don't have a leverage issue. Only $7.5 million on a $435 million balance sheet. We have ample capacity to continue to grow and to still be very lightly levered as a company. And as a portfolio, I'd argue that we have one of the best, if not the best, portfolio in the industry. We have an 84% payout ratio. And so that means that 16% of our revenue can go away tomorrow and we continue to be able to have 100% payout ratio. So it's not a portfolio issue. It's not a dividend issue. So what is it and what are people getting wrong? It's about the custody. It's the limited institutional demand for our stock, even though we run our business to qualify in all respects to list on New York and NASDAQ, because we focus on cannabis and they won't have us. Where it limits that institutional bid. And so that's where I think it's worthy of people diving in further. And for those investors that have gone into investigating NewLake and have established position, you know, we feel like we've been rewarding them with our dividend, and you get paid handsomely while we wait for that catalyst to get to that exchange, to the New York or NASDAQ, unlocking that institutional bid, what should only create more value for our shareholders.
The last question I've got teed up for you here. Because of your earnings, it's different than your typical REIT when they report. So what earnings metrics should the average investor be looking for? Is it just AFFO? Is there something else that they should be focusing on in your earnings releases?
Yeah, I believe it's AFFO. I think that's one of the more important ones for our company. I would also note that our accounting is cash basis accounting. It's not straight line accounting. That's another nuance. We do that because all of our tenants are in a federally illegal business and run the risk of getting shut down at any point in time. And given the uncertain nature of being able to collect rent for 20 years across our leases, we are on cash basis. And so that gives you a real true measure of what's happening in our P&L. But if you focus on AFFO, you're going to see the cash flows of the business. And I think that's the most important metric.
Well, Jarrett, Anthony, you got any last parting thoughts that you'd like to share with us?
Mr. Annenberg, I'll see if you have anything you want to share.
No, I think we covered it.
Yeah, I really appreciate the opportunity to talk about NewLake here. In closing, really just stepping off of that last question, in closing, I'll talk to you about one of our largest investors and what they believe. They believe that federal reform will occur, and I wholeheartedly believe it. I can't tell you, back to the crystal ball, if federal reform getting us to a major exchange will occur in 2 months, 2 quarters, 2 years, or 2 decades. God, I hope it's not 2 decades. But we do know with certainty, I believe it in my bones, it will happen. And we'll pay a very attractive dividend, in my opinion, while we're waiting for that event to occur. And this is one of those very few opportunities for investors to be able to step in front of that institutional demand, which is driven entirely by the structural nature of our business, that we provide capital to the cannabis industry. If not for that, I think we'd see significant institutional demand for our stock. And so therein is the issue for us, but therein is also the opportunity for our investors.
Well, Anthony and Jarrett, I just want to thank you so much for taking time out of your post-holiday weekend to chat with the iREIT plus Hoya Capital audience. Should we have any questions, we will follow up directly. But I know that with the amount of knowledge that's been dropped here within the past 50 minutes or so, that the investors will definitely take away a lot of good stuff here. And again, just thank you so much for all of this. We really do appreciate it.
Thank you for having us, David. Enjoyed the conversation.
Thanks, guys.
Thanks, guys. Long in building. I appreciate everything.
Thank you.
Thank you.
Thank you.